All right, welcome back. So this is episode 2 for the weekly market review, which is the week of March, which is the first week of March of 3rd to 9th, and we entering the second week of March currently. So this is our week daily. Now I'm going to the first episode was dedicated to the weekly market, and this video is going to be dedicated to the daily, the 4 hour, the 60 minutes contract. So basically I want you to pay more attention as well, as this time frame is going to give you the much more elaborate insights about this market, about the euro and dollar index. So currently we see that the new week has opened already, and we started trading. But what I'm looking out for is on the daily. I wanted to know my daily premium and discount. So and I look at this price move from here to here. All right. So, because of the week does not make any significant effect, I want to remove the week from that range, and I want us to look vividly at the body of these candles. So, so that means that our highs and low is here, and our 50% will be here. This middle, this line. Let me change this this thing so you can all see what I'm saying. You all can see what I'm trying to explain. All right. So okay, it's 100%. Let me make it thicker. All right. So this is what I'm trying to say, that the 50% is here. So and if the 50% is within between this high and this low and this high, if the 50% is here, and practically, I'm not expecting a very large or a very big move lower. That is, I'm not expecting the market to retrace so deep, because we have on a higher time frame, and in the grand scheme of things, we are just starting this the move higher. All right, so but that's not an avenue for you to chase the price. So that's why we are making use of these parameters to determine the areas of interest. And if we want to apply the week as well, we can have our midpoint on top. Exactly, we can see the midpoint is exactly the level of this previous of this week high, this candle high. So we see that they are actually at the same level. So we want to make use of the distance, this between we want to make use of this range in price to determine to come up with the areas in which we want to see market retrace to. All right. So that is just an insight, and that does not mean that we have to come all the way to this discount price to go higher. All right, since uh, and again, why I am trying, why I still support us coming that lower is because of we already on uh, weekly premium price. So if we are on a weekly, we need to a little bit come into the daily premium to engage. And if this want to make it more interesting, if they want to actually give opportunities to the retail traders like us to participate at a very elaborate discount, they are going to reprice us into this other block. All right, this price. If we tap on this area, that is, they have given you a very big opportunity, meaning that a very big opportunity for you to engage, right? But that does not mean that it is 100% going to be a successful trade. It just means that it just means that It just means that it is going to give you opportunity to engage at a very, at a lower risk buy. So you're going to buy at a very low risk. Right? Actually, you're going to participate at a very low risk. And that is it for the XY. And I try to change the fib to show all the levels. Now, if they allow us to get into this area, that is the 61% region. So if we get it, that is a very, very beneficial discount price. So and that is very, I think it's very, we can all say that's very, very interesting to have such kind of candles or such kind of move in price. So with this, I have come to the end of this daily Euro US dollar daily contract. So let's go to the FY. So I'm not trying to rush, but I'm trying to give you provide you guys with all the information that is required, and everything that I make use of. Now on the DXY, we can see that there is an opening in price here. An opening in price here. This opening, if eventually we get to this opening price, this range gap, right? Let me also say opening price, sorry. This range gap, if we eventually get into this range gap, that is a very inquisitive areas to look out for. And on the XY, let's put our fib and apply our 2, and let's see what we have. Now, that area, you see why I am looking at towards that area, and we also have that area is our 50% region, which is the the differences between the discount and the premium price. Now, we know that this is a premium, and if we want to be a seller, we want to see markets get to a premium. Now, I have always liked to add this. This does not mean that we have to get to premium for this market to move lower, because if they are actually willing to derive lower, they might not want to give the retail traders opportunity to engage. That is why, as we are looking to engage at this price, be also cautious enough to have observed to see, because there is no way they are going to price this market lower that you are not going to see it before it happens. If you can't see it before it happens, that means that you can see it after it has happened. Then you journal it, log it, so that when next time such things happen, you can eventually see it before then. That's why I did these videos every day. I just explained to you about, if you watch the first episode one, that about if market price higher, we price form a lower low, form a lower high, sorry, form a lower high, then form a higher high, then we come back and sweep that lower low. Then the next move that's going to go higher is going to be very impulsive, and it's just a proven theory. Meaning, why I say it's a proven theory, because it has happened not more than once but consecutively. If you go on a lower time frame, imagine this thing that happened on a higher time frame. Now, if it happened on a lower time frame, bro, they are not going to be giving us opportunity to engage at a premium. They will not want to price it lower. All right, they will keep moving it lower. But if you are smart enough and you know what you are doing, you are supposed to see the footprint even before it happens. All right, right? Okay, just like me, I wasn't smart enough. Now, calm down. I wasn't smart enough to identify that that is what they are trying to interpret, but after it has happened, before I can see it, but I can still participate because it is on a higher time frame, right? Like that kind of move I saw, somebody that has the insight has already participate from this liquidity sweep. But you that does not have that, you can still engage, but now you have to be very conscious and know what parameters you are using to engage, and also know what you are seeing in price. what is driving you to engage at that particular price level. So you need to have all these together, and all this is what is going to give you a head start above others in this market. So now I think this is another thing I have said in my past videos, that you see January, February trading. Okay, January is not really that good for trading, because they use January to prepare us for the move, for the yearly move, January and February. But you see March trading now, like you can see vividly now that March gives you this month now. With the beginning of this month, it has given you a specified direction. The move is clear to you. Unlike the January and February, you can definitely be like, okay, I am neutral, I don't know, even know. You can like, so that you like, I'm neutral, I don't even know where the market is likely to go. That is not bad. Okay, if you are neutral, be honest with yourself. Okay, if you don't know where, like if you are there and you actually don't know where this market is heading to right now, be honest with yourself. I don't know, but this is what I can see in price. Then journal it, log it. If you log it, when next time it has shown you that same parameters, you'll be able to, come up, like you'll be able to like, okay, this is what it is, and this is what it actually is. Right. So that is a very, very important thing that we all need to put into consideration, rather than just jumping into conclusion and convincing or confusing ourselves about what we're seeing in the market and what we expect. So if we have this as the 50%, and if eventually they are willing to give us opportunity to participate at a discount price, yes, we don't have enough liquidity to want to put a position here and put a stop here, right? Why? I don't know if you have that liquidity to risk such amounts. That's on you. All right. I'm not telling you to go pick up a trade right now, but I'm just saying, to me, I don't have that kind of liquidity. So that's why I do wait to see, let them tip their hand to me. All right. I don't want to jump into conclusion. Let them tip their hand to me. Then I want to, like, okay, I like what I'm seeing now. I can engage, and I know the amount of risk I'm willing to secure on this trade, and see if it comes out uh good or bad. So whatever be the case, we move, right? That's just the narrative. So that is it for the daily contract on the XY. We're going to go to the 4 hourly contract on both market. So this is the 4 hourly contract on Euro US dollar now, making more sense. And this is why I had to do this video. I had to make this video to have episode 1 and episode 2. We can see that there is need for this episode, right? Because there is need for me to explain this lower time frame, right? So now on the 4 hourly contract, we can now say, okay, we can apply our fee at this level and this high, and we want to mark out our discount mass premium. So if we eventually get here, now this is a bullish order block on 4 hourly bullish order block. I don't want to just add that to my chart because I could see it. All right, but this is a bullish order block, and having that bullish order block already in price, then if you will, match out this out, then there is a possibility that we're going to see market. This is a sweep on liquidity. I want to see the market sweep this liquidity and price into this bullish order block. And if they tip their hand into this level, I think it will be a very, very good discount price to engage in and to buy, and see if the weekly is not willing to take this price. But because of because of how the market is booking right now, I am looking for a very impulsive move next week, which is this week that we are getting into, that is going to take us above this high and consequently above this high. So that's what I'm looking out for on the Euro US dollar 4 hourly contract. And also we can see that I don't know. I just like want to bring your eyes back into this level, this weekly inversion fair value gap. If you watch my videos, my past videos, you're gonna see how I was interpreting these areas. And now I think if you are following me from the start, you have a proven theory already about inversion fair value gap. I usually say that inversion fair value gap are more effective than what than a fair value gap itself. Now you can see how inversion fair value gap is effective, right? How it has been booking and it has been delivering this price. So whenever you have this narrative in your hand and you have an inversion fair value gap, then you can actually just like bank on it, but just actually engage with it on a demo or just paper trade it and see how it works for you. But I have, it's a proven theory to me that inversion fair value gap is more effective than ordinary fair value gap. So that has brought me to the DXY 4 hourly candle. And also we can, I'm just this is the area I have marked out. And also that area that shows a volume imbalance has an order block, right? A bearish order block. So eventually if we get to this area, we're going to what lose this order block. So now I have enough liquidity to want to, to engage at this move. All right. What am I doing? Like I have enough liquidity to want to engage with this kind of move, right? But me engaging from here to here is going to be I don't have that enough liquidity to do that. So, but although we might still since there is a fair value gap here, and we might that might not lead us lower, but I just look forward to this area, and we can also see that that volume imbalance has been tapped. If you look at this delivery lower is caused by that word volume imbalance. We retrace into it and we deliver lower impulsive. So that is basically it, and I don't want to waste much time here. We see we have sell side here before this, but I don't want to even look into that for now. So let's go to the hourly contract, and we just have little things to say, and we call this a day. So this is the Euro US dollar hourly contract or 60-minute contract. I think also we have this bullish order block here, and we can see that how markets jump into these two areas. Do you know that this move inside this area has already telling me that we have filled this void? I don't know, but I call this a liquidity void. I don't know how you're going to interpret it, but that this is the difference between the past week and the other week high that I mark out on the weekly time frame. This is how I make use of them. But this is what is telling me now that we have used this in this area, just like when we have a fair value gap here, which is a daily inversion fair value gap, and this swing is already telling me that it has done, but I really did not want to listen. I was wanting to see us sweep here before going, but no, that is wrong, and it was wrong, and I learned my lesson from that. So this is actually telling me now that we might not have a reason to come back into this area, and we might continue going higher. So, but I want to see the market tip its hand. We have a fair value gap here, but I want to see it come into this area if it can, at least come into the discount price and give opportunity and tip its hand. What I mean by tip its hand, give me what I want to see. All right, not I'm not trying to put my will on price, but I want to see it give me a certain parameter, show me some certain characteristic on price, which is going to increase my confidence in participating with this price. All right, so if you watch my Wednesday video before Thursday display out, I call this order block out, and you see how effective it was. I'm not supposed to be telling you now or showing you proof about my analysis. If you've been following me, you have seen so many proof that okay, if I'm not 100%, but at least I'm 70% with my analysis. And also I have also learned with myself that many areas which I have been, I have many areas I have called out wrongly, and what I see there and versus what actually happened. So all those things is a form of lesson for me as well. And I hope this video too is insightful, and I call it the episode 2 for this week.